that retirement will better suit me next year, or will interest rates continue to rise? I kind of talked about this. I think interest rates are still going to potentially rise a little bit here until the Fed stops, and then it'll kind of slow down. The Fed will stop raising interest rates. The good news is if we look at the PPA, the Pension Protection Act segment rates, which is what most of these companies use to calculate their lump sums, they leveled off in July, August, and they had a big spike in September and October. They came back down November, December. So if that trend continues, we might be at that level where we're starting to level off, and they may start coming down. If they start coming down, they'll start seeing the lump sums go back up. Now, by no means will they go back to where they were in the pandemic levels, because the interest rates were artificially low. The government drove those down low in order to fuel the economy. So hopefully we don't see that happen again. But we should see these kind of level off and then come back down. And then what that will do is that will help the lump sum calculation on pension plans. It'll also help the investment marketplace, especially on the bonds. We go back to the 1930s. Pretty much anytime we've seen the bond market take a hit in a year, it's really come back quite a bit the following year, with the exception of a couple of years in the 70s or so. But we took one of the biggest hits we've ever seen last year in 2022. So if we get to a leveling off point and the Fed stops raising interest rates, and we have the high yield for those bonds, we'll probably see a lot more money chasing those yields, and we'll see a rebound in the bond market as well going forward.